You may not think about it when you board a plane, but the aircraft you are flying on is very likely not owned by the airline itself. It is leased. This simple fact is the bedrock of a colossal global industry. That industry just experienced a tremor of historic proportions. A massive $7.4 billion deal is on the table. It will see one of the world's most influential lessors, Air Lease Corporation, change hands. This isn't just a business transaction. It's a fundamental reshaping of who owns the skies. The implications are vast, touching everything from the price of your ticket to the future of the world's largest airplane manufacturers. Why should you care? Because aviation leasing is the invisible engine that powers global travel. It determines how quickly airlines can expand their routes, how modern their fleets are, and how much it costs to fly from New York to London or from Singapore to Sydney. When a giant like Air Lease is acquired, the ripples are felt everywhere. This deal is about more than money changing hands. It's a strategic power play for control over the assets that connect our world. It's a story of ambition, finance, and the future of how we all will travel. This takeover signals a profound shift in global finance and aviation. A Japanese-led consortium is making a bold statement, stepping onto the world stage against American and Irish firms. They are betting billions that air travel demand will soar. They're buying airplanes' access, influence, and a critical role in the supply chain. At the very heart of this story is a straightforward yet staggering transaction. A powerful consortium of Japanese financial institutions has made a formal offer. They want to acquire Air Lease Corporation, a titan in aircraft leasing. The price tag is $7.4 billion. That price underscores Air Lease's immense value and strategic position. This is not a merger of equals, it's a full-blown takeover. It transfers ownership and control to new hands across the Pacific. It's a blockbuster deal. So, what does Air Lease do? Imagine an airline wants a fuel-efficient Airbus A321neo. It doesn't have the hundreds of millions to buy it. That's where Air Lease steps in. Air Lease buys brand new aircraft, Boeing, Airbus. Then they lease those jets to airlines worldwide for a monthly fee. They're the world's landlords for the skies. They hold hundreds of modern, in-demand jets. They partner with carriers, legacy giants, and nimble, low-cost upstarts. The deal is an all-cash offer. The buyers are putting serious money on the table, not stock. That signals deep commitment and financial firepower. The Japanese group isn't just buying airplanes, they're acquiring a world-class management team, a massive order book for future deliveries, long-standing lucrative relationships with 100-plus airlines. They're buying a turnkey operation at the peak of aviation finance. And they're paying a premium. For aviation, this is a moment of reckoning. A sale of this size will recalibrate the competitive landscape. It signifies massive consolidation and creates a new mega leaser. The group leading this ambitious charge is a consortium of Japan's most powerful financial and industrial players. At the forefront, a major Japanese megabank, a large trading house, a sovereign wealth fund, not a single company, a strategic alliance of capital, a Team Japan approach to global impact. Their names may be unfamiliar to most. In global finance, they are titans. They bring immense financial resources and a long-term investment horizon, ideal for the capital-intensive world of aircraft leasing. After the acquisition, Air Lease becomes a wholly owned subsidiary. The Air Lease name likely stays, but decision-making shifts to Tokyo. Buyers say they'll retain Air Lease's expert management team, led by its legendary founder, to ensure a smooth transition. They are buying expertise as much as assets. This is a strategic move to protect massive investment. Japan is diversifying beyond automotive, and beyond electronics. Acquiring a top-tier American lessor equals immediate entry into a dollar-denominated high-growth industry. It's a hedge against currency swings, and a bet on the rising global middle class, especially in Asia. They are buying a stake in the future of global mobility and commerce. The new ownership creates a formidable entity, combining Air Lease's entrepreneurial spirit with deep, patient Japanese capital. This fusion could unlock bigger aircraft orders and more complex competitive leasing deals worldwide. For the industry, a well-funded competitor has arrived. The captains have changed. They are charting a new course. In the world of aircraft leasing, size is not just an advantage, it is everything. The more airplanes a company owns, the more powerful it becomes. This fundamental principle drives this $7.4 billion acquisition. By absorbing Air Lease's massive, modern fleet, the new Japanese-led entity catapults into the top echelon of global lessors. This newfound scale gives them tremendous bargaining power with aircraft manufacturers, Boeing Airbus, When you're placing orders for hundreds of jets at a time, you get better pricing. Earlier delivery slots, more favorable terms. It's a simple rule. The biggest customers get the best deals. This enhanced scale has a direct impact on competition. Smaller leasing companies will find it increasingly difficult to compete with this new behemoth. The new Air Lease, backed by deep-pocketed owners, can offer airlines more aggressive lease rates, more flexible terms. This consolidation could lead to a market dominated by a handful of mega lessors. Tougher environment for smaller players. We are witnessing a strategic move to build an industry giant too big and efficient to challenge. The announcement of the Air Lease takeover sent shockwaves through markets, especially for plane makers, Boeing, Airbus. Stocks jumped within hours. It's a huge vote of confidence in their products and the industry's future. Investors spending $7.4 billion on aircraft signals belief demand will stay robust for years. It's an endorsement from the buyers. Air Lease is a major customer for Boeing and Airbus. It holds a massive order book, hundreds of new jets worth tens of billions in future revenue. The takeover secures that order book and backs it with stronger ownership. That lowers cancellation risk and stabilizes production plans, de-risking future sales. Wall Street loves that certainty. The deal also signals value in modern narrow-bodies like the A320neo 737 MAX. That will boost investment across supply chains. Engine makers GE, Pratt & Whitney and thousands of parts suppliers all benefit. It's a rising tide for aerospace manufacturing. Analysts now watch consolidation among lessors. A bigger Air Lease puts pressure on rivals. Could this spark more mergers and acquisitions? For investors, aviation finance just got a lot more interesting. For airlines, it's a double-edged sword. On one hand, a scaled-up Air Lease can be a more reliable partner, funding massive fleet renewals, providing the aircraft needed for expansion. They can offer a one-stop shop for airlines looking to modernize. On the other hand, less competition could lead to higher lease rates across the board. Fewer options and less leverage in negotiations for airlines. Costs that could be passed on to passengers. Ultimately, the rationale is clear. Build an unparalleled portfolio of desirable modern aviation assets. Air Lease is known for a young, fuel-efficient fleet of Airbus A320neo, Boeing 737 MAX family jets. By acquiring this portfolio and the future order book, the Japanese consortium secures a long-term revenue stream. They are not just buying planes, market control, pricing power, a dominant position in the aviation ecosystem. In this game, size truly matters. A deal of this magnitude, $7.4 billion, is not funded with pocket change. It requires a sophisticated and massive financing structure orchestrated by some of the world's leading investment banks. The Japanese consortium is not simply writing a single check. They are assembling a complex package of capital from various sources. A significant portion of the funds will come directly from the consortium members' own balance sheets. The megabank and sovereign wealth fund involved have vast reserves of capital, and they are deploying a substantial amount of it to make this strategic acquisition a reality. This demonstrates their deep commitment and belief in the long-term value of Air Lease. However, even for these financial giants, funding the entire deal with their own cash is not the most efficient approach. That is where the big global banks come in. A syndicate of lenders, likely including major names from Wall Street, major names from Europe, major names from Asia, has been assembled to provide a multi-billion-dollar acquisition loan. This debt financing is crucial. It allows the consortium to leverage its investment, meaning they can achieve the takeover without tying up all their available capital. To understand the magnitude of this deal, you must understand the man who started it all, Stephen Udvar-Hazy. He is, without exaggeration, the father of the modern aircraft leasing industry. A Hungarian immigrant who fled to America co-founded ILFC in 1973 and pitched a revolutionary idea: airlines could lease planes instead of buying them. This simple concept changed everything. He built ILFC into the world's biggest lessor, sold it then, in a stunning second act, founded Air Lease in 2010, growing another industry giant from the ground up. This acquisition marks the end of a remarkable chapter in aviation history. For decades, Udvar-Hazy was the single most influential buyer of commercial aircraft on the planet. His orders shaped Boeing and Airbus strategies. A big Udvar order often meant a program's success. His exit from controlling ownership signals a shift from visionary entrepreneurs to large institutional capital. It is the end of an era. Air Lease's legacy under Udvar-Hazy: disciplined foresight, uncanny market foresight. He built a fleet of young, fuel-efficient, in-demand aircraft. He avoided niche models and kept a strong balance sheet. That discipline made Air Lease a Wall Street favorite and a trusted airline partner. The Japanese buyers aren't just buying assets.